Let's dive into one of the most powerful principles that shape the world, compounding. You may have heard the saying that compound interest is the eighth wonder of the world, but this concept goes beyond just numbers on a page. It's a secret weapon that can transform your financial future. But here's the surprising part. Compounding isn't limited to money sitting in a savings account. In fact, there are 4 different types of compounding, and each one has the potential to bring you closer to financial independence if you learn how to use them effectively. By the end of this, you'll not only grasp these 4 types but also know exactly how to apply them in your life to start growing your wealth today. Ready? Let's get started. The first and most well-known form of compounding is financial compounding. This is where your money starts working harder than you do. Here's how it functions. When you invest, the returns you earn, whether from interest, dividends, or capital gains, are reinvested. That means you start earning returns not only on your original investment, but also on the accumulated earnings over time. Imagine this: if you consistently invest a small amount, say $500 a month, at a 10% annual return, in 30 years, you'd have more than $1.1 million. But here's what's incredible. Only $180,000 of that comes from the money you put in. The remaining $900,000, that's the power of compounding at work. Why does this happen? Because time and consistency are your biggest allies when it comes to financial compounding. The longer you remain invested and the more disciplined you are about reinvesting your gains, the bigger your wealth snowball becomes. That's why starting early is crucial. Even small contributions can grow into life-changing amounts over time. But financial compounding isn't just about stocks or mutual funds. It applies to other areas too. Take dividend-paying stocks, where your earnings are reinvested to purchase more shares, or real estate investments, where rental income is used to acquire additional properties. The key is to find opportunities that allow you to reinvest your returns consistently. Now let's talk about the second type of compounding, one that doesn't involve money but is even more valuable: knowledge compounding. Here's how it works. The more you learn, the better you become at applying that knowledge, and over time, the effects grow exponentially. Let's break it down. When you start acquiring a new skill, like coding, investing, or public speaking, you're not just adding isolated knowledge, you're building connections between what you already know and the new information you're gaining. These connections make it easier to grasp and master future concepts. Take someone learning about investing. At first, they might only understand the basics of buying low and selling high, but as they continue, they'll dive into asset allocation, risk management, and tax strategies. Each new layer of understanding builds upon the last, sharpening their decision-making and improving their results over time. What makes knowledge compounding even more powerful is that it's transferable. The skills you gain in one area often benefit other parts of your life. For example, developing self-discipline through fitness can help you stick to a financial plan. Mastering communication skills can turn you into a better negotiator, leading to higher salaries or better business deals. The key takeaway? Invest in your learning. Read books, take courses, find mentors. Every bit of knowledge you gain has the potential to open doors and create opportunities, and just like financial compounding, the earlier you start, the greater the impact. The third form of compounding is relationship compounding, and it's often underestimated. The concept is simple. Connections you build today can create opportunities in the future. But the real power lies in how these relationships expand and strengthen over time. Think of every meaningful relationship, whether personal or professional, as planting a seed. With time, effort, and care, that seed grows into a tree, and as you continue nurturing connections, you eventually cultivate an entire forest. And here's the best part. A thriving forest doesn't just provide shade for you, it fosters new possibilities, collaborations, and a strong support system for everyone involved. Take entrepreneurship as an example. At first, your network might help you land your initial clients. As you consistently provide value, those clients start recommending you to others, expanding your reach. Over time, opportunities start coming your way without you even seeking them, simply because you've built a solid reputation and a powerful web of connections that keep growing. But this principle isn't limited to business. Relationship compounding plays a crucial role in your personal life as well. Strong connections with friends and family offer emotional support, valuable insights, and even financial guidance when you need it most. These bonds deepen with time, creating a strong foundation for a richer and more fulfilling life. So how do you make this work for you? Focus on giving more than you receive, show genuine interest in people, provide value, and remain consistent in your efforts. The goodwill you create will return to you many times over, often in ways you can't predict. Now let's explore the final type of compounding, habit compounding. This principle revolves around the idea that small, consistent actions lead to extraordinary results over time. Imagine stacking bricks. A single brick may seem insignificant, but if you place one every day, before long, you've built a wall, or even a castle. The power of habits lies in their ability to automate progress. Once a behavior becomes a habit, it no longer requires conscious effort, it just happens. Over time, the results multiply. Consider financial habits. Saving just $10 a day might not feel impactful, but over a year, that adds up to $3,650. Over a decade with interest, it could turn into tens of thousands. The same applies to health. A short workout 3 times a week might not bring instant changes, but over months and years, it significantly improves strength, endurance, and overall well-being. Or take learning. Reading just 10 pages a day may seem small, but in a year, that's over 3,600 pages, the equivalent of 10 to 15 books. The secret to habit compounding is consistency. It's not about making huge leaps overnight, it's about steady, incremental progress. The best part? As positive habits take root, the effort required decreases while the rewards continue to grow. That's habit compounding in action. As you can see, compounding isn't just a financial principle. It's a universal force that applies to wealth, knowledge, relationships, and habits. When you harness all four, you're not just accumulating money, you're creating a life of exponential growth and opportunity. But here's the truth. Compounding requires time. It's not about instant wins or overnight success. It's about patience, discipline, and committing to the long game. The sooner you start and the more consistent you are, the greater the rewards will be. So what step can you take today to start leveraging the power of compounding? Maybe it's opening an investment account, enrolling in a course, reaching out to a mentor, or committing to a small daily habit. Whatever it is, take that first step because every small action today compounds into something greater tomorrow. And remember, compounding isn't automatic. You have to make it happen. So what's stopping you? Start building a wealthier, fuller life today.